A blissful good afternoon to all. I, Sanjana from 3rd BCom Honors, will be your MC for the day. I welcome you all for the 4th day of Budget Conclave. Finally, the Union Budget for the financial year 2023 has been officially published yesterday by our Finance Minister, Ms. Nirmala Sitharaman. Let's have a recap on key highlights of Union Budget 2023. The new income tax regime has seen a major revamp in the income tax slab rates for the year 2023-24. The basic exemption limit under the new income tax regime has been hiked to 3 lakh. I thank our director, Reverend Brother Anthony Weilil, our deputy director, Brother Peter, and our beloved principal, Dr. Arun Subbara, for extending their immense support. I would also love to extend my gratitude on behalf of all students to our ideal professor, Mr. Desmond Raj, HOD of Commerce Department, and all the faculty members for organizing such an informative event for us. I take immense pleasure in welcoming Ms. Deepika, speaker for the day. Ms. Deepika is an enthusiastic manager and a team lead. Ma'am works as a financial manager in a software company by name Hacker Earth Technologies Private Limited. Ms. Deepika is an extremely result-oriented finance professional, clear understanding of task and execution of the same with the ability to learn and unlearn is one of her strengths. Ma'am is a multitasker and is experienced in handling a team of 7 individuals of all ages and expertise. Ms. Deepika handles review and finalizes of every aspect of finance, therefore accounts and book closure, direct and indirect taxation, audit, payments, AR and PR role reporting, budget, etc. Ms. Deepika is also being awarded the Best Employee for the Year and the Best Speaker Award. We welcome you, ma'am. Over to you, ma'am, now.
Thank you, Sanjana, for the introduction. A very good afternoon to each and everyone's present here. Am I audible?
Ma'am, a bit louder, ma'am.
This is the 1 second.
Yeah, sure.
Better now?
Yes, ma'am, better.
Okay. Okay, so a very good afternoon to one and all present here. I would like to thank Sanjana for the introduction, as well as I would like to special thanks to Jasmine for giving me this opportunity to represent and speak about the budget. So, well, all of us have joined in today to take a small sneak peek into the outcomes of our union budget 2023 and 24. So let's get started. I'll take you through the entire presentation in a very brief manner. The reason being, the budget is too huge for a discussion of 1 hour. So let's connect and complete whatever is possible in a short time that we have right now. Now, coming to the budget 2023, we look into the agenda that we have for the day. First one is the vision for Amrit Kal and the priorities. We'll also look into the direct taxes, which comprises of the personal income tax and others. Then we also look into the indirect taxes, basically an overview, the customs, and the GST. Now, the speciality of this year's budget is that our Honorable Finance Minister, Ms. Nirmala Sitharaman, calls it as the first budget in the Amrit Kal. Their vision is basically as follows. First is opportunities for citizens with focus on the youth. Second one is to create job opportunities, growth and job creation. And the third vision of this budget is to have a strong and stable macro environment in terms of economic environment. They also have given out priorities, which they fondly call as Sapta Rishi, which is the 7 priorities. This is a huge list of priority where each and every priority is very in-depthly taken into the budget. But let's look into it in a very brief manner, starting from inclusive development to reaching the last mile, youth power, financial sector, green growth, unleashing the potential, infrastructure, and investment. Coming to the very first priority of Saptarishi, we are going to see how the budget is going to impact on the inclusive development achievements. Our government is planning to have a 9 crore drinking water connections to rural houses, cash transfer of 2.2 lakh crore to over 11.4 crore of farmers, an insurance coverage of 44.6 crores, then Jandan Bank, which is a prime minister oriented initiative, which will be 47.8 crores. They're planning to invest around 220 crores of COVID vaccinations for 102 crore persons, 9.6 crore LPG connections under the Ujjwala scheme, and 11.7 crore household toilets and other requirements under the SBM. The second priority they have is they have very nicely named it as reaching the last mile. The inclusions over here is the Pradhan Mantri Development Mission to be launched. They also plan to give a financial assistance to the state of Karnataka for irrigation and drought-prone regions of Karnataka. They also have a requirement of having around 740 Ekalavya model residential schools and teachers to be recruited for that. And finally, the Bharat Shri to be set up for digitalization of the ancient inscriptions. The third priority they are giving is for the youth power, which they fondly call as the Amrit PD. Here they would like to have new coding courses and courses relating to AI, robotics, 3D printing, etc., so that the youth will have a lot of opportunities going forward in, in areas of AI, robotics, 3D printers, etc. They also have a measure to boost the tourism sector. So basically, what they're trying to do over here is they select at least 50 destinations and they make it as a tourist destination. And lastly, under the youth power, they're also planning to have the unity malls where each and every state is encouraged to set up a unity mall. And what happens here is they promote one district, one product. They also promote the GI and the handicraft products. Basically, a district wise recognition and a product wise recognition is what is sought over here under unity malls. The next priority is coming to the financial sector, which is very, very important. Under the financial sector, there is a 2 lakh of small savings one-time scheme, which is given to Mahila, that is for women benefit. For senior citizens, earlier we had a senior citizen savings scheme of around 15 lakhs, which was the maximum cap. That cap has been increased to 30 lakhs now. The other initiatives that we have is to promote the business activities in the GIFT IFC. GIFT is nothing but Gujarat, Gujarat International Finance Tech City, and it is under the international financial service sector. And it is also involved in creating more trained professions towards the securities market. It also plans and aims in setting up of central data processing centers and also having a credit guarantee scheme for the MSMEs, medium and small scale industries, for a credit guarantee of up to rupees 2 lakh crore, and setting up national financial information registry, which is basically involved in efficient lending, promoting the financial inclusions and enhancing the financial stability of the country as a whole. The next priority is basically on the green growth. Now, green growth is something to do with waste to wealth ideas. They have also opted for using different alternative fertilizers. They have planned for a mangrove plantation along the coastal lines. They have the wetlands utilization, optimal utilization of the wetlands. And apart from this, the other initiatives they're looking for is setting up the bio inputs, resource centers to facilitate farmers to adopt natural farming. So they're planning around 10,000 bio inputs resources as such. Secondly, they are also planning for promoting a battery in energy storage systems, promotion of coastal shipping for energy efficient transformation, funds to be allocated for replacing old polluting vehicles. So, as the name goes, green growth is basically environmental friendly, is another priority that our budget has been equipped with in this year. The other priority from the Saptarishi is trust based governance, which is unleashing the potential. Here, basically, the measures that they have taken is to make automation in India, to bring in AI in India for all solutions, whether it is in agriculture, health, and other requirements in every city possible. Secondly, they plan to have a national data governance policy so that it will be used for the research by startups and academicians. Then we have Vivad Se Vishwas. This is mainly for the MSMEs so that they get relief for every COVID affected period, the post COVID affected period. It's a relief for the MSMEs. Vivad Se Vishwas 2 is basically a easier and standardized settlement scheme, which is used for settlement of disputes of the government and the government undertakings. And then we have e-courts. They are planning to launch e-courts, which is very, very efficient for the administration of justice. The next one we have is entity DigiLocker. This is almost already introduced in terms of licenses and other stuffs where we have a DigiLocker in place. But this entity DigiLocker will have the entire online storing and sharing of documents with the business ecosystem. So everything is becoming online here. The next plan that the government has is setting up of 100 labs for 5G services based applications. And finally, they also have this R&D for lab grown diamonds. The R&D, the research and development for lab grown diamonds, I'll cover it in a few slides to come. It's a very interesting uh, piece of information over here, wherein even the tax rates have been reduced for a lab grown diamonds. The next priority that we have under budgets is infrastructure and investment. So basically, our government would like to have infrastructure boosted and investment also boosted, which has a multiplier impact in rising our growth in the employment sector. So they expect increased capital investment outlay by 33.4% to around rupees 10 lakh crore. They plan to give a 50-year interest-free loan to state governments to incentivize the infrastructure investment with the condition that the amount for the capital investment has to be utilized in the financial year 23-24. Highest ever capital outlay of rupees 2.4 lakh crore for railways, 100 transport infrastructure projects identified for end to end connectivity for ports, coal, steel, fertilizer sectors, creating urban infrastructure in Tier 2 and Tier 3 cities via the establishment of UIDF. Now, coming to the most sought area, which is direct taxes and especially the personal income tax. Most of us had a lot of expectation when it comes to the personal income tax in terms of its rates of taxation and the slab rates and other benefits, especially your Chapter 6A deductions, your ATC, ATD, etc., etc. But let's see what exactly the amendments are for, and is the old regime beneficial or the new regime beneficial? We'll have a short discussion on this. Coming to the points that we will be discussing here are basically the amendment related points, which is five. The first one is regimes in income tax. Second one is the rebates, the 87A rebates. Third one is the benefits for salaried class and the pensioners. Fourth one is a surcharge rate. And the last one is the benefit on leave encashment. Coming to the very first one is regimes in income tax. As we all know, we have the old tax regime and the new tax regime. The expectation on the budget was to have some favor on the old tax regime as well as the new tax regime. But unfortunately, we do not have any change in the old tax regime. It remains the same. Be it the rebate, be it the slabs, be it the tax rates, everything remains the same in case of old tax regime. But when we come to the new tax regime, we have a couple of changes here which are beneficial. The first one we have is the change in terms of the slab and the tax rates. Rebate also, we see a change. Earlier in the old tax regime, only had the rebates. New tax regime did not have. But in this year, we have a rebate for a new tax regime also. Benefit of I beg your pardon. It was not for rebate. It is for the benefit of standard deduction. Old tax regime had it earlier. The new tax regime did not have it. So in the new tax regime, we have this benefit of standard deduction and family pension introduced now. Apart from this, there is a small change in the surcharge which is affecting the new tax regime but does not affect the old tax regime. So this is the old tax regime which we have, which is just the same for less than 60 years. This is for the senior citizens and this is for the super senior citizens. This is also for the first column is also for the non-residents, whereas the non-residents do not fall in the next two columns because it's a benefit. So up to 2.5 lakhs, that is the basic exemption limit we have. Everything is nullified. There is no taxation at all. From 2,50,000 to 5 lakhs, there's a 5%. It's the same like last budget. 5 lakh to 10 lakh, it's 20%, and anything above 10 lakhs is 30%. Coming to 87A rebate, we had a rebate of up to 5 lakhs, which was 12,500 rupees. So anyone earning up to 5 lakh rupees need not pay even a single rupee of tax. But even if you earn a 5 lakh, 1 rupee, you had to pay 12,500 rupees of tax, which still remains as it is. Coming to the new tax regime, we see a change in the basic exemption limit. It was 2.5 lakhs earlier, but now it's been made as 3 lakhs, where you don't have to pay any tax. And if you see the slabs also, it has been changed. So earlier the slabs used to increase by 2.5 lakhs, but here there is a increase by 3 lakhs. So if you see 3 lakhs to 6 lakhs gives a difference of 3 lakhs, then 6 to 9 gives a difference of 3, 9 to 12 also gives a difference of 3. Apart from this, one more difference that we have is there is no 25% tax rate. So 25% tax rate has been omitted completely in this budget. Another addition that has been given over here in our new tax regime, a benefit is basically a rebate on a taxable income up to 7 lakhs. So the new tax regime is beneficial by extra 2 lakhs and they have a rebate of up to 7 lakhs. Coming to standard deduction, earlier the old regime alone had the standard deduction benefit. However, in this budget, the new tax regime also has a standard deduction of 50,000 rupees, but it is allowed only for salaried employees and pensioners. And in case of salaried employees, if their income is greater than 15.5 lakh or equal to 15.5 lakhs, then they are entitled for a standard deduction of 52,500 instead of 50,000. So this is a major change that has come as a benefit for a new regime. Apart from this, there's a family pension deduction of INR 15,000 also, which is allowed for the new regime, which was already existing in your old regime. Now comes the interesting part, which is a surcharge. You would be overwhelmed to know that surcharge highest rate was 37%. And when you calculate the final tax rate, 30% if you consider the highest tax slab, add surcharge to it, add the cess to it, one individual's final tax rate at the highest earning would come close to 42%. And that was considered as the highest in the world. So in this budget, our Honorable Finance Minister has actually reduced it from 37% to 25%, which means any taxable income in the new regime above 2 crores, the surcharge rate remains 25% only, and there is no 37%. However, if we go back to the old regime, 37% still remains, and there is no change in the surcharge when it comes to old regime. There is another change which has, there is another amendment that has come in with respect to our leave encashment. Leave encashment exemption is allowed both in the old regime as well as the new regime. But the amendment that has come up now is the exemption under section 1010AA, where there was an exemption of an upper cap of 3 lakhs. Now that cap has been increased to 25 lakhs. This is a very good welcome move that the government has given to all its nation's employees. There's a shift in the default tax regime as well. Earlier budget had made the old tax regime as a default regime, which means if an assessee does not choose any of the tax regime, he would by default come under the old regime. But now they have made the new regime as a default tax regime. However, an assessee has an option to choose the old regime or the new regime, subject to disclaimer. What is a disclaimer is given in this particular table here. Any assessee who is an individual, HUF, BOI, AJP, AOP, but accepting a cooperative society and a company can opt for an old regime over a new regime every year without any problem. So you can keep switching every year, no problem. But if any of the above mentioned assessees or a company firm or an LLP who is having a PGBP income, then you have only one chance to revoke the new regime and opt for the old regime. But after that, new regime is mandatory. So you just have one chance to file a return in the old regime. Thereafter, it is mandatory new regime. So as a note, if you don't have a PGBP, you can opt for either or. If you have a PGBP, then it is mandatory that you have to go for a new regime. One thing that we'll have to note is that the rebate under Section 87A, which I spoke both in the old regime as well as the new regime, is allowed only for residents and not for non-residents. The other aspects in the direct taxes with respect to its amendments are grouped over here. There are certain benefits which has been given for startups. The first benefit is they've been given a relief for the eligible startups to carry forward and set off their losses, and this has been increased from 7 years to 10 years now. The second benefit is the date of incorporation of the eligible startups was actually 1st of April 2023. Now that has been extended by a year. So 1st of April 2024. And any of the startups which are incorporating by the said 1st of April 2024 are eligible for exemptions. Under capital gains, we have a few amendments. Few of it which is very beneficial and a few which is not. The first one is a benefit under section 54 and 54F, that is the exemption that we claim for capital gains taxation. Earlier there was no cap, but now they have capped the benefit to only 10 crore. Let me explain this with an example. If you have sold a property, say a capital asset, under Section 54 and 54F, you are allowed to purchase another residential house property for you to claim that particular capital gain as exempted. Now, if earlier, no matter how much you have sold the earlier property for, and how much ever you are purchasing the new property for, if you have a capital gain, then you could have claimed the benefit out of it. In the new budget, if you have sold a property for say 25 crores, and if your new property is 11 crores, then you will get benefit of only 10 crores. So it's only the capital gain or the cost of the property that you're purchasing, whichever is lower. The maximum cap is 10 crores. So this is not a very good benefit for the assessees. Second one we have is income from market linked debentures. It will now be taxed as a short term capital gain. Cost of acquisition or cost of improvement, COA or COI, will not be including the interest expense which is earlier claimed as a deduction. All these years, what would happen is, especially in cases where you have purchased a house based on a loan, whether it is for construction or whether it is for purchase, the interest on loan also you would get a deduction under section 24 of your income from house property. And you would also add it as a cost of acquisition or a cost of improvement, just to show that this is the amount that you have purchased the property for. So there was a dual benefit. Now we cannot do that. So either you claim the interest as an expense, as a deduction earlier, and don't add it in your COA, uh, or it has to be the other way around. But however, the budget has clearly mentioned that the COA or the COI should not include the interest expense earlier claimed as a deduction. That means the interest expense has to be claimed as a deduction. Next one is the cost of acquisition of intangible assets or any rights. If at all you have purchased it or acquired it without paying any consideration, then the cost of acquisition of such intangible assets or rights shall be considered as nil. You cannot consider the you cannot consider the benefit of opting for the inflation rates for the cost of acquisition in this case. Now, coming to a situation where a gold is converted into a electronic gold receipt or vice versa, the government says that this is not a capital asset, so no capital gains taxation comes into picture. Coming to the next portion is the presumptive taxation. This is also made a very beneficial in this particular budget, again subject to disclaimer. Under presumptive taxation, section 44 AD, which speaks about the small businesses, the earlier limit was INR 2 crore, and the revised limit which they have made now is 3 crore. So the tax audit need not be opted by the small businesses who are following 44 AD if they are falling within this limit. 44 ADA is for specified professionals. Again, the previous limit was 50 lakhs, but now the revised limit is 75 lakhs, beneficial. The disclaimer over here is that this revised limit can be opted only if the cash receipts and the cash payments in the financial year as a whole do not exceed 5%, which means all your cash receipts and cash payments has to be non-cash, that is online or check, and 95% of such has to be non-cash basis. Only 5%, below 5% can be under the cash. If that is not followed, then you will be losing out on the revised limits. There are a couple of amendments that has happened under TDS also, tax deducted at source. Coming to the first and the second point, both of them are interlinked. We have online games, lottery, crossword puzzles. Earlier, this was one section where we had a threshold of 10,000 rupees and the tax was at 30%. But now we have the government has removed the online games and has also removed the threshold on it, and has informed us that the tax on the online games will be only on the net winnings, and that too at the time of withdrawal or at the end of the financial year. So every 1 rupee that is earned in the online games will be taxed, but the time limit for it is during the time of withdrawal, on the net winnings, or at the end of the financial year. Whereas all the other areas of that section, which is lottery, crossword puzzles, or games, etc., there's absolutely no change. It remains the same as before. The interest payment on the listed debentures, which was earlier exempted, stands withdrawn. So there is a taxability of the interest payment on the listed debentures. We had a EPF scheme where there's a taxable component withdrawal. Earlier, whenever there was a no PAN cases, the withdrawal used to be taxed at straight 30%. But now there is a benefit given to withdrawal of taxable component of EPF scheme by non-PAN cases, where the TDS rate is reduced from 30% to 20%. In case of corporates, the threshold limit for withdrawing the cash is INR 3 crore per annum, and there's no TDS that is coming for such withdrawal of cash for the corporates within the said 3 crore per annum. We would have seen in certain cases where the taxes of the previous years will be deducted in the later years because of the various disallowances that happen whenever you don't deduct TDS in the past years. So when there is such case, there was always a confusion in the market as to what needs to be done when a tax of the previous year's income is deducted now, when the income tax returns is filed and closed. So the budget specifically addresses this issue. They say if there is any tax on the income of previous year which is deducted later, then you'll have to claim credit of TDS in the earlier year. You don't have to revise your IT returns. The next one is about the incentives to IFSC on relocation funds. This has been extended to 31st of March 2025, which is a 2 years of extension. Then, in case of income of development authorities, any income from the development authorities is completely exempted from tax. In case of new manufacturing cooperative society, in order to promote them, the income tax for them is at a concessional rate. It will be 15% only. Senior Citizen Savings Scheme has been enhanced from 15 lakhs to 30 lakhs. That's the maximum deposit. The 50-year interest-free loan to states for capital expenditure, which I told in the other slides, has to be spent within 23-24 financial year itself for them to avail the benefit. The next one is about the MSME. This is also an interesting portion. Earlier in the market, if you see the practical scenario, people used to not pay MSME on time. The small and medium scaled industries, they used to not receive the payments on time. So in order to promote a timely payment to the MSME, the budget has particularly stressed upon timely payment to the MSME based on the MSME Act. Else, the deduction under Section 43B will be disallowed. So going a little deeper into this, Section 43B speaks about deductions under your PGBP chapter, wherein you will be eligible for the deduction of the expense only on the payment basis. So if you don't pay an MSME, then it will be disallowed and you'll be adding it back to your profits and paying out taxes. Only when you pay out to the MSME, whatever their fees or whatever their invoice amount is, in that year you can claim the 43B deduction also on the payment basis. Payment received by the Agniveers from Agniveer Corpus Fund is also completely exempted. So that was all about the direct taxes, where the amendments were a little favorable, a very little were unfavorable. However, the major impact was on the personal income taxes, where new regime was more benefited. Indirect taxes is another area of our discussion when it comes to budget. And in indirect taxes, we have customs and goods and service taxes. This time, we do not have many amendments when it comes to both the indirect taxes. And as a part of overview, our finance minister as well as the government would like to aim on promoting the exports. So both in Schedule 1 and Schedule 2 of our Customs Act, promotion of exports has been concentrated on. Second one is boosting the domestic manufacturing. So this is also called as inverse tax planning, wherein if you increase or decrease the tax rates, then the boosting of domestic manufacturing happens. There is one example which I will take forward in one of the slides. And enhance domestic value addition. So the more you produce domestically, The more export can happen, the more value addition can happen for the domestic manufacturing, and encouraging green energy and mobility. So let's look into the first part of customs. Our finance minister starts with a note saying a simplified tax structure with fewer rates helps in improving tax administration, and this is with reference to the customs. So, keeping this in mind, the BCD, which is called as a basic customs duty, is reduced from 21% to 13% on many goods other than the textile and the agriculture, which is a very good move. Effects on tax rates, apart from whatever was mentioned above, we have excise exempted for GST paid compressed biogas contained in the blended compressed natural gas. So a blended compressed natural gas had a GST impact as well as the excise impact. So that is called as a cascading effect or the tax on tax. To avoid this, the government says if GST is paid on the compressed natural gas, well and good, then exempt the excise from it so that only one tax is paid to the government. Second one is customs duty is exempted on import of capital goods and machinery required for manufacture of lithium ion cells for batteries used in electric vehicle. So this is basically to promote the electric vehicles. The customs duty on the import has been reduced so that it can be made more environment friendly. Third one is in case of toys, bicycles, automobiles, and naphtha, the BCD, basic customs duties, the cesses and surcharges all have been slightly modified. In case of lab grown diamonds, which I had told that I'll be speaking about in the next few slides, lab grown diamonds. So basically, whenever we had the diamonds, the cutting of diamonds and all, which was undertaken for exports purposes, it was all out of the natural resources. But now the natural resources are being depleted. Since depletion is into place, the government has already given widespread authority for having a lab grown diamond to be grown. So this particular area requires a seed, and this seed has to be imported. Now the government has actually reduced the basic customs duty on the seed which is used for manufacturing of lab grown diamonds so that the diamonds can be uh, grown in the labs and utilized for the export purposes. The next one is duty on key inputs for domestic manufacture of shrimp feed is reduced in order to enhance exports. So the government has noticed that the shrimp, which is a seafood, is the majorly required export item. So in order to increase their export, the input which is required for their feed is reduced in order to benefit the exporters. BCD on parts of open cells in TV panels is reduced to 2.5%. And in order to correct the duty inversion, BCD for electric kitchen chimneys has been raised for 7.5% to 15%. This is done because they have to start production of domestic production of chimneys in India. That is the reason the import duty has been increased from 7.5 to 15% so that people will stop importing the chimneys and start production of chimneys over here for domestic growth. Then we have the denatured and ethyl alcohol, which is used in chemical industry, that is made completely duty free. Import duty on silver jewelry, bars, and articles are made equivalent to those that of the rates for gold and platinum. And the BCD for the compounded rubber, it was 10%. It's been raised to 25%, but the maximum is 30 rupees per kg. So that they've set a limit when it comes to the compounded rubber. Coming to the GST, again, the amendments in GST is very less this time. So the number one requirement as far as the amendment is concerned is with respect to the GST prosecution launching. Earlier, the GST prosecution in case of any offense against the GST Act could be launched for if the amount was within 1 crore, if it was above 1 crore, but now they have increased it to 2 crores. Now again, this increase in amount is exception for offense of issuing invoice without actual supply. So, in case any of the companies issue invoices, GST invoices, but they do not supply any goods or services, then a GST prosecution can be called for even if the amount involved in it is less than 2 crores. Apart from this, we have a compounding fee. This time, the government has reduced the compounding fee from a range of 50% to 150% to as low as 25% to 100%, which is a very good benefit for the assessees. Apart from this, there's a decriminalization of certain offenses also, such as in case anybody is obstructing or preventing any officer in charge of his duties, or there's a deliberate tampering of material evidence, or there's a failure to supply the information. These offenses are being decriminalized. There's a facilitation of e-commerce for micro enterprises. So the unregistered dealers earlier were not allowed to have a intrastate supplies, especially if it was with respect to supply of goods on the e-commerce platform. So e-commerce platform is basically the Flipkart, the Amazon platform which we have. There's a buyer and a seller. A buyer A seller cannot get into the e-commerce platform without having a registration. But now they have cut it down, and even an unregistered person or a composite taxpayer can actually have e-commerce facilitation and make intra-state supplies of both services and goods, which is a very good initiative. And then we have CSR activities. There is the input tax credit used for any goods or services, which is used for a CSR activity, which is a corporate social responsibility, is blocked. So basically, corporate social responsibility is an activity which is taken care of by the company for the benefit of the people living around the company, and this is mandatory for every organization which falls under the particular threshold limit as set by the government. Earlier, the ITC, the input tax credit which was obtained for using the goods and services for such CSR activities was eligible, but now this will come under the block credits. Apart from this, this is a small a replica of how money is coming in and how money is going out from the government's kitty. So this also is discussed in the budget. They say the amount comes in, the money flows in through income tax, which is 15% of the total amount, through union excise duties, which forms around 7%, corporation tax 15%, GST is 17%, and other small ones like non-tax receipts, non-debt capital, and customs. However, borrowing and other liabilities itself is 34%, which is very, very huge. And where does the amount go out to? It goes out to interest payments, which is 20%, then centrally sponsored scheme 9%, subsidies, defense is around 8%, central sector schemes is around 17%, finance commission and other transfers, then state share of taxes and duties and other expenditure and pensions. So this was all I had for today. If any of you have any questions, I'm open for it. Otherwise, I think Sanjana, you can take it over.
Thank you, ma'am, for sharing your insights over the Union Budget Outcome 2023-24. I'm sure we, students of SFC, will have so much to learn from your expertise views. If any students have any question, you can ask and clarify now in the chat box. I'm honored and privileged in proposing the vote of thanks for the day 4 of Budget Conclave. Firstly, I would like to thank our speaker for the day, Ms. Deepika, for joining us and briefing us about the Union budget outcomes of 2023. My heartfelt gratitude to all the teachers and students for attending this day 4 session on Budget Conclave. I express my gratitude to the teachers for giving me this opportunity to host today's session and to propose this vote of thanks. Thank you, everyone. I, Sanjana, signing off. Have a pleasant evening. Thank you, ma'am.